Hello, hello. It is 6:46 p.m. October 4th. I'm here for a market update, looking at the economic events for today and the market movement here. Starting with the economic calendar, we had a few FOMC speakers. I don't know why it says Williams and Mester because they did not speak today. We actually had Daly, Jefferson, and I believe that's all. We just had Daly and Jefferson. Basically, they continued with the same rhetoric that inflation is too high. There's still work to be done. It's mandatory. We are committed to bring inflation down with all means necessary. They even mentioned that they know that it's not easy for people. It's causing pain for the economy and for many Americans. Jobs are expected to go down, but still inflation is the priority. So this maintains our overall fundamental bias. The Fed are maintaining their hawkish rhetoric. Now the two data points here that came out, factory orders came out 0% month over month, below forecast, a little bit better than previous though. So this had minimal impact. However, the jolts was a little bit more significant as we had a major drop from previous and a lot lower than forecast. So this shows that there are less job openings. And if there's less job openings, well, that means that the labor market isn't as strong as the politicians are saying. And if the economy is not as strong as people are saying, well, the Fed has to be a little bit more careful when raising interest rates. They can't raise interest rates through the roof because we're seeing the economy start to show signs of weakness. All right, so this bad news, so to speak, is actually good for the economy because it's bad for the Fed raising interest rates. So if it's bad for Feds raising interest rates, naturally, all asset classes are going to have a relief rally and a pullback, and that's what we saw. As we move on over to the US dollar currency index, we see that this bearish pullback structure continued throughout today's session, where we had consecutive lower lows and lower highs, and we had a recent break of structure of 111.5 in the London session. We saw that continue with retesting our monthly key level here and consecutively making just bearish candles here and breaking through two of our key levels here that we were looking out for. So it was an extremely bearish day for the US dollar, as we can see that investors are starting to price in a potential Fed pivot, right? But we have to remember as the market starts getting antsy about potential Fed pivot, you have to zoom out and say, especially with this liquidity zone right here, we are still maintaining bullish structure. There's nothing that has changed. As I mentioned on the economic calendar here, we had our Fed speakers. They maintained the same rhetoric. There has nothing been changed, right? But the market isn't always rational, right? They're hoping on this Fed pivot that will come based on this data and based on potential a bad labor market data on Friday. But right now, higher time frame structure is still bullish, and the Feds are still talking rate hikes, that there's still a lot of work to do. So this is just a pullback, and an aggressive pullback at that, but that's all it is. Now, looking at the equity markets, this morning, pre-New York, I mentioned that we had this little break from previous highs here, and it was likely to continue based on the optimistic sentiment, and we saw that continue as equities rallied throughout the day. So the optimistic sentiment held throughout the session, And my trading idea for the day was gold buys based on the structure here. Again, we had this bullish daily breaker structure, 4 hour and 1 hour, so we had a triple time frame confluence of bullish price action and market structure. We had Vix weaker, global equities gaining from the lows, as we saw. The USD in bearish pullback structure, printing consecutive lower lows. I've mentioned that again. Overall, short-term optimistic sentiment holding. So trade ideas, buy opportunities were the ABC rejection at the 1 hour break of structure around 1701, 1702, right around this level. And we had exactly that as price came to retest this level, 1701, 1702, and had the bounce into our higher time frame supply zone around 1725. Right, so we had there was a nice trade idea there on gold. As you can see, the sentiment and the trade ideas held some weight, as again we are maintaining this bullish structure from the lows. We've created this high, higher low, a new higher high, and look at the speed and the size of the candles. They are very, very strong. However, we're still not breaking this higher time frame structure, as I'm looking at this 1728 to 1735 region as a very significant bearish structure level, right? So even though this is very strong, we are still holding the higher time frame structure. So not to be confused about this short-term relief rally. However, we can't ignore that the buyers are strong from this level, but we can't anticipate more buys at this level since we are at that higher time frame structure. Again, zooming out to the daily time frame, we're now sitting right at previous sell side liquidity, where sellers came into the market previous lows and drove gold into these new lower lows. Okay, so we're coming back up to this level right now. The same price that sellers came in, we're now sitting at that price right now. So I can't anticipate any further buys unless we clear above this zone and then come back and form some sort of continuation structure. But also in terms of confirmations needed for this, we would need potentially a string of bad economic data that would lead investors to price in more Fed pivot potential. If there's more Fed pivot potential due to the bad data, we could get the further pullback here, potentially to the next zone, 1760s. If not, well, the buyers can sizzle out here, potentially form a little pullback, double top, and we can end up seeing a reversal over here. But I'm not going to be quick to sell at this level given the strength. So I'm going to need to see more signs of exhaustion in this area. All right. Having said that, there was beautiful buy opportunities here. Again, I identified this trading opportunity right pre-New York. We had the 1 hour break and retest, and going down to the 1 minute, we had beautiful price action confirmations. At the retest, we had an ABC reversal pattern. So the ABC reversal pattern was this one, right? We came down and retested our 1 hour breaker structure. Then we had here, this is the A, which is a weak resistance attempt. B is a liquidity grab, a fake out, basically trapping sellers on the wrong side of the market. Then C, buyers take over, break to new higher highs, have a 1 minute breaker structure and a reversal, causing this level to be now some buy side liquidity. Retest this level and we had the bounce from there. Now for me, I did not take this buy because it was prior to 8 a.m. I was waiting for the retest after the 8 a.m. open, but never got it. It came to 1704 when I was trying to enter at 1703.4. So going forward, I'm going to adjust my my system rules to include pre-New York Open, given all of the confirmations, knowing that we can retest around 1745 pre-New York and have that bounce from there. And it is possible that New York Open is just going to shoot up, and that's what I predicted. If you rewatch the New York session trade ideas, I predicted, oh, with all these confirmations, I'm seeing gold prices gonna just rally at New York Open, and that's what it did, but I wasn't in. So should enter if I have all the confirmations and I have perfect entry confirmations on the 1 minute higher time frames and price action, everything's lining up for buys. I will take the buys even if it's prior to 8 a.m. Going forward. So that's that. Great setup here. As you can see, we retested the highs, 85 pips, and even an extended target, 210 pips potential from this buy opportunity. So it's very nice movement here in the New York session. One-sided volatility as the strong bullish trend was in play. Now quickly going over to the GU chart here, we had similar price action and trade ideas since we were, if I zoom out to the 4 hour, we have this bullish structure and this most recent higher high, higher low, new higher high sequence of events here on the 4 hour and the 1 hour, showing a new higher high in the London session and coming to retest previous 1 hour demand zone. Now the only issue here is I did not want to take this trade because I was anticipating the potential risks of having a double top at the daily bearish break of structure as well as the 4 hour supply zone. We could have just rejected this zone here instead of breaking through like we did. So I preferred having the break and potential retest above this zone to take some trades. So I'm okay with this decision of not taking this trade. I am perfectly fine with that decision, and I will do that again in the future because the daily break of structure is a very significant level where you can see we have all of this price action, this bearish price action after the break here, coming to retest a daily key level like that. It's very risky to trade through that level. So I'm okay with not getting into that trade. But I'm still going to break down the 1 minute price action as we had perfect confirmations on the 1 minute. As we had our 1 hour break of structure, bullish break of structure, new higher high. Then we had our pullback and retest. So let's take this right here. So from these highs, we came back down to retest our demand zone here, 1.1280 to 1.30 here. Came down to wick retest, and we had the same ABC pattern, right? So the ABC right here is the A, which is a weak resistance attempt into higher time frame bullish liquidity. Now B is this point right here, is a liquidity grab, failure to break, fake out, and then the C is here when we have the buyers take over and shift the market structure bullish. Right, so this sequence of events shows a market structure shift, and when you have these confirmations at a key level, there's a high chance that price is going to retest this, and buyers are going to step in and push the price up. So this trade idea would have worked out, but again, we had a lot of resistance in this zone, and we could have potentially rejected. So that's why I did not take it. But the price action was clean for buys here. So that's it for the session recap. Yeah, I'll be back tomorrow morning with a new pre-New York session trade ideas video.